How's it going, everybody? It's Stas here, and in today's video, just like every Sunday, we're going to be talking about and breaking down the top couple of stocks and ETFs that I'm watching and that I'm looking to trade heading into this week in the stock market. This week being, I think, the last full week of March in 2020. And in general, guys, I want to go over what the markets did these past 5 trading days and what the stock market futures in terms of the S&P, the NASDAQ, and the Dow are looking like right now, so we can get a better understanding and kind of sense of direction in terms of where this market could be headed, right? And let me tell you, like you all saw in the title, these markets gapped down pretty aggressively, and they actually hit the 5% down limit, which is insane, and that happened in the first 10 minutes. But before we do get into that, guys, I know it's crazy. This market is crazy. I need you to do one thing for me. Hit that like button and also consider subscribing to the channel if you want to see further content like this. And trust me, you're going to want to do that. And also, why not go down below in the description box and get 2 free stocks from Webull valued up to $1,400. All you have to do is deposit $100 and you get those 2 free stocks linked down below in the description box. So let's get right into it, guys, starting off with the S&P 500. And it's no surprise. Well, to most of us, it's no surprise, right? These markets have been getting crushed. The CV, it's been spreading right now in the United States. I just looked. There's about 35,000 cases, most of them coming from New York and here on the East Coast. Businesses are shutting down. The economy is being affected. JP Morgan came out saying Q2 GDP growth is going to be projected at negative 14%, which just blows out what happened in 2008 when it comes to the Great Recession. So, yeah, to put it lightly, things are crazy right now. Things are out of control, and the markets have been reflecting that. Because remember, what the market does, it's kind of like a graph of human emotion. I know you've heard that phrase before, but it's really true, because we're seeing these swings up 10%, down 10%, up 5-6%, down 8% the next day. And that's really in line with what you're seeing in real life. People are panicking. People are wiping out the, what is it? Walmart toilet paper. Every single supermarket, toilet paper's gone. Food's gone. So people are panicking, and that translates into the stock market with finances, of course, because people want to liquidate and have that cash at hand to pay bills for emergencies and so forth, right? So we're seeing that in the stock market right now. Again, last week, these past 5 days of trading, craziness. The S&P was at 2562 at its peak, and then it ended off the week roughly at around $2,300, meaning we saw from top to bottom here roughly a 10% move in the S&P 500. And it gets crazier, guys. Take a look at these futures. The futures for the E-mini S&P, down 5%, down 114 points. And I believe this has happened last Sunday, the Sunday before that, and don't quote me on this, but maybe the Sunday before that as well, meaning these futures have halted, right? And when they halt, when they hit that 5% down limit, they don't open up in terms of, we don't see what the price is until the stock market actually opens. So the futures are going to be halted until 9:30 a.m. Eastern Standard tomorrow when the market opens, and then we'll see what the S&P, the Dow, and the NASDAQ, what they're fluctuating at that point. But as of now, again, the ES down 114 points, down 5%, which is insane. The NASDAQ down 4.88%, down 340 points. And the Dow Jones down almost 1,000 points here, down 950 points, down 5%. And mind you, I mentioned this in previous videos, and it's kind of common sense, but the further down we go in the Dow Jones, the more and more a 1,000 point decrease means to the Dow Jones, right? Back when the Dow was 25,000 points, 30,000 points even, if we dropped 1,000 points, it's not as insane as if the Dow is 18,000 and we drop 1,000 points, right? This drop is even more drastic, if you guys understand that. And yeah, that makes sense, right? So overall, these markets, very volatile, and they're going to remain that way. And I've been saying this over the past couple of videos. And really since, it feels like for the past couple of weeks, we've been talking about this, right? So let's get into what I'm thinking for this upcoming week. Kind of some thoughts from the trading perspective and from the long-term investing perspective. Because, guys, I'm not one of these doomsdayers. I know some people out there might be. I don't know if any of you guys are watching my channel, but some doomsdayers think this market's going to zero. I'm not one of those people. I'm more of on the boat that this market will go down roughly 50%. And again, I've been saying this for the past couple of weeks here. That's kind of what I think is the worst case, 50% to the down, right? Maybe 60 if we're talking worst case scenario. And in that case, we're going to get some nice individual stocks to purchase at pretty decent prices, really cheap prices even, if we get to that 60% threshold to the downside, right? So let's just dive right into it, guys, and some thoughts going through my head like I have three heads, my head going on right now. So tomorrow, we're going to see a lot of volatility again. And if you're one of those people that held TVIX over the weekend, SPXS, even, SQQQ, UVXY, if you were to hold something like that, which I don't advise to do that, it's very risky. These are meant to be day traded only. Understand that. But if you did hold it, you're going to be up a pretty massive amount, massive. TVIX could be up 50% tomorrow at open if the volatility stays there, which I assume it will. SPXS could be up 15%, right? With the S&P being down 5% and that being a 3x leveraged ETF. So for tomorrow, this is what I'm focusing on at open. And this is, we talked about this last week, it might have been. What I've noticed is when we do hit these 5% limit downs in the futures, we typically hit the circuit breaker the next day earlier on in the day. I know the most recent time we hit the circuit breaker, it was later on in the day, but before that, the previous couple of times, we hit the circuit breaker early in the morning. So that's what I'm watching for tomorrow. In the morning, again, these futures are down 5%. The S&P is going to open. If we get that gap down another 2%, and it could happen very quick, guys, that's what I'm waiting to see. If we get that, SPXS could be a runner in the morning, which again goes up whenever the S&P is going down. And it's already going to be up, but it can run up even more again if that S&P goes towards that circuit breaker in the morning. And if that happens, there's a nice 4, 5, 6% potential here on the SPX ETF if, again, the S&P gaps down another 2%, which I think is really likely, and that's kind of what I'm waiting for. Another way you can play that is with TVIX. This is a volatility ETN that it's risky, guys. It moves very quick, but with the volatility, and if we get that slippage in terms of hitting that circuit breaker, this is going to be up, quote, listen to this video and come back tomorrow and you'll be like, Stas was right. This is going to be up to $800, maybe $900. I don't know. Let's not carry ourselves away here, but $800, $750, $800 at least. I'd say, right? And that's going to be a big move that we can maybe hop in and out of in the morning, right? So in terms of market ETFs, those are the two main ones I'm watching. And since the NASDAQ arguably is the most volatile out of the three main indexes, SQQQ could be worth watching as well, which made a ridiculous move on Friday. We hit lows pre-market at $22, and we rallied all the way up to $30 after hours. So that is a massive move, and SQQQ simply goes down whenever the NASDAQ is going up at a 3x rate. So NASDAQ drops 5%, SQQQ will be up 15% roughly, right? That is how that works. So for me, this is what I'm watching, mainly heading into the morning tomorrow. SQQQ, SPXS, and TVIX. And another thing that I could see happening, right? We talked about how the S&P might gap down, hit the 7% circuit breaker. Well, we might do that, but from that point, we've seen the markets rally back up in the same day. So I'm thinking if the circuit breaker hits, we might consolidate a bit, either hit the 10% down mark, which could happen, or if we start to spin back up, we might see a rally. Not saying we're going to go positive, but we might just see a dead cat bounce or something like that, right? Some sort of rally like this. Take a look at this day. We gap down, hit the circuit breaker. Maybe this day, actually, no, this was not the day we hit the circuit breaker. But either way, no, something like this, right? We gap down, we rallied for the rest, not the rest of the day, but we rallied for about an hour, right? 2 hours, and then we continued the downtrend. I can definitely see something like that playing out in terms of tomorrow. Let's break down the price of gold right now, and let's take a look at how it's been comparing to the overall markets. This is pretty interesting, right? The S&P, again, let's take a look at it very quickly. I actually didn't even look at it before. The S&P from the top, all-time highs to where it is now, not including this future gap down, is down 32%. Including the future gap down, it's going to be down about 37%. So let's say 35% to use round numbers. Gold, if we take a look at gold, let's say you put money in gold and, just to hedge against the dollar, the economy, the stock market, whatever, even if you bought at 1,700, you would still be beating the S&P 500. Gold is down only 11% from 1,700, not being the all-time high, but the high on this 4-month chart, to down to about 1,500. So that is quite interesting, right? Gold is actually, in terms of when we're looking at percentage return, it's beating pretty much every stock, the market in general. The only thing it's not beating is the dollar, right? Which is simply you're either earning 0% or you have a high yield savings account earning whatever, 0.5%, 1%, or maybe you have bonds, right? So gold's doing pretty well. And if you were to actually buy gold, believe it or not, guys, back in December, literally 3-4 months ago, not too long ago, you'd be even on your position right now. You'd be break even. You would not be down at all, while people buying stocks, they'd be down. And again, this is not trying to promote gold or anything. I'm just comparing the two because I think it's interesting. I think it's interesting seeing how something performs compared to something else, especially in times of volatility, because, we want to see where can we put our money to try and, outpace, whether it's the market. That's kind of the benchmark people use, but we can outpace whatever, right? So at this point, gold is interesting. Silver, when we're taking a look at silver, it's not doing as good as gold, not nearly as good. It's actually doing pretty bad. Actually, compared to the market, it's doing worse in terms of the S&P, right? Silver from $19 down to where it is now, it's dropped roughly 40-ish%. So it's actually right in line there with the S&P, actually doing a bit worse than the S&P when we're looking at this 4-month chart. And in general, when it comes to gold, I'm looking at some miners, ETFs. GDX is one that I have my eyes on right now to play. JNUG, JDST, although they've been very wacky recently, I'm still watching them. And, these have been extremely wacky. This one's gone from 107 down to about $3 in terms of JNUG. JDST has gone from $44 down to about $6 per share. So I'm not looking to mess with these too much. At this point, to be completely honest with you guys, they do seem a bit wacky, but you'll notice that with these leveraged ETFs, a lot of the time, I don't even know how they function fully, and it's very complicated the way that many of these function. And my advice really would be, if you don't understand a pair of ETFs, just stay away from it, right? I personally trade what I understand. Not saying that I don't understand JDST, JNUG. I understand it on a basic premise, but I understand SQQQ, SPXS, TVIX a lot more than I do JDST, JNUG, and the way they move. And that's just me being honest. But either way, do your own research, guys. As always, your own due diligence when it comes down to anything that I talk about here on the channel. And that's for your benefit, right? For you to be able to become a self-sufficient trader and investor. So those are some, ideas that I have for this upcoming week and kind of what I'm watching, and just a little comparison between gold and the S&P. Now, when it comes to individual stocks, a lot of the stocks I'm watching are ones that I'm looking to play puts on. I talked about this last week. I'm really interested in playing puts on cruise lines, CCL. This one was up $2, 20% on Friday. And with this market gapping down in terms of the futures, excuse me, guys, I could see CCL gapping down pretty massively tomorrow and having a pretty bad day, as well as RCL being the Royal Caribbean Cruises. And why do you ask? Well, they're facing bankruptcy, guys. Let's be honest. The cruise lines, they are facing bankruptcy. They're not 100% getting bailed out. Who knows what's going to happen in terms of that? The airlines, on the other hand, they're more likely to get bailed out. And what I was thinking, honestly, and I got a comment in terms of my video on Friday, and I was thinking it earlier that day, then I got the comment. I was like, yeah, that's a very good point. Warren Buffett might buy an airline. I don't know the regulations, the logistics behind it. I'm sure it might not even be possible to buy a full airline right up, with cash. There's regulations. You guys have to realize that. And to buy something that big, it's complicated, right? But Warren Buffett, hey, who knows? He might end up buying up, whether it's Delta. I forget which airlines he owns. I know for sure he owns Delta. He owns a couple, right? So he might buy up Delta. He might buy up Southwest, right? I don't know if he owns American. He might buy up American. Although if I had billions like Berkshire and Warren Buffett, I would probably lean more towards Southwest and Delta if I were to buy out an airline completely. So for me, in terms of shorting these airlines, it can still be done. I think there's still room for them to drop, so put options are very viable here. But if we do get news in terms of one of them getting bailed out, the airlines, or all of the airlines getting bailed out, they already are going to get bailed out. I think it's like $50 billion or something in terms of that stimulus package plan from the government. Either way, if one of these people come out and bail it out, Buffett comes, buys one, I can see the stock going up, which is dangerous when it comes to shorting, especially shorting, and of course playing puts. So those are some 2 cents there in terms of airlines, cruise lines, and honestly, guys, when it comes to just investing in stocks, I'm mostly focusing on my retirement account right now, my Roth IRA. If you guys don't know what that is, do research on it, but pretty much what it is a retirement vehicle that you can buy stocks in, you can buy ETFs in, and the goal is to put post-tax money into this account, meaning you have a job, business, whatever. You take this income, you've already paid taxes on it, you put it in this account. You make money in this account, dividends, capital gains, whatever. And when you take this money out when you're 55 or 56, I think the age is, you actually don't pay any taxes, zero taxes, right? So that's the beauty of the Roth IRA, and I've been focusing on that. $500 per month. Also, my M1 Finance account, $500 to $1,000 per month into that, growing that from scratch. And in terms of the individual stocks, mostly I'm focusing on businesses that have cash and that have been through recessions and that I think can weather the storm, right? Facebook. This is one that, honestly, I'm interested in buying up a pretty nice amount of Facebook if we get down into the 120s, 110s, especially the low 100s, guys. I think that is an amazing deal for Facebook when we're talking long term, because their balance sheet's pretty much flawless. A lot of cash, short-term investments, right? So Facebook, I'm loving it, right? And I own it in my M1 account, some other private accounts as well. Johnson & Johnson, J&J, down 6%, will probably be down heavier tomorrow. And what did I say a couple days ago? I don't buy on green days, right? I said this when Johnson & Johnson was at $130, $135. I was saying it's dumb, in my opinion, to buy here. Wait until we get the red days, because the red days are coming. And what do you know? Friday, down 6% for J&J. And tomorrow, again, like I said, there's going to be lower prices, probably $110, who knows? And that is where I'm looking to buy. So J&J, for sure, I'm looking to buy up that one. And Disney, I might hedge with some puts, but I'm looking to buy it up too. Although a lot of their businesses shut down, the parks, which make up 30-40% of their revenue, this is a short-term hiccup. You have to understand, guys, they have a brand that it's arguably the best economic moat in the world. Arguably. It's definitely top 5, top 10 when it comes to businesses, right? They're just all these characters, the movies, this stuff outlives humans, guys. This stuff is from the 1920s, 30s, 40s, 50s, and it's withstood everything. Wars, crisis, this, that, right? All these characters. And it's going to continue to live on past even our generation. People watching this video, these characters, Frozen, Snow White, Cinderella, whatever, they're all going to be here. And the parks, everything, once things start kicking back in, they're going to explode in the next 3 to 5 to 10 years for sure. So for me, Disney, $75, $70, $60, $50, I'm a buyer of this company. So honestly, guys, when it comes to individual stocks, Facebook, J&J, Disney, Microsoft, Google, these are the main ones I'm focusing on. And if I'm looking at a high flyer stock, more risky, definitely more risky through a potential recession, AMD. I'm very interested in AMD. Advanced Micro Devices. You guys know I'm in NEO, although NEO is a speculative play. They can for sure go bankrupt, which is why I don't have a lot of money in NEO whatsoever, but still I'm focusing on it. Maybe we'll add more if it goes down into the $1 range. And MasterCard, when we're looking at some more kind of payment provider plays, MasterCard, I absolutely love. And now that we're approaching $200, low 200s, and, into potentially the 190s as soon as tomorrow, I'm, looking to pick up a pretty nice position here in MasterCard. And overall, when it comes to trading, it's completely different. Trading, you guys know I'm looking to get in and out of this short-term volatility. Investing in this type of market, it's a whole different beast, because you don't want to allocate capital. The goal is not to allocate capital in businesses that are at risk of bankruptcy, right? This is something that, if I'm being honest, I learned my lesson this go around. I've been buying into Boeing, and they just cut their dividend, but I'm not looking to sell out completely, but I'm not looking to add any more money into it. I'm looking to just let it rock because, yeah, if they go bankrupt, I lose all my money. I understand that. This is a learning lesson, and the goal is not to put money into companies like Boeing in a time like this. That's at least my personal opinion. Fresh money, I'm looking to invest in companies that I am 99% sure will make it through. They've been through previous recessions, they've paid dividends, and they have a lot of cash, and they're stable through times like this, right? That is what I'm focusing on. Not companies like Boeing, not companies like the airlines, not the cruise lines, not the hotel stocks. And the truth is, guys, you can find a 5-10 bagger in the hotel stocks, cruise line stocks at this point. There's no doubt about it. In 5-10 years, there's going to be a stock that if you were to buy it now, you're going to 10x your money because the stocks are so beaten down. But the risk is that you don't know which one is going to make it through, which one's going to go bankrupt. So if you're putting capital in a stock that, yeah, it could be a 10-bagger, you're also risking it going bankrupt. So that's something that you have to come to terms with your own risk profile before even making that type of decision. So I'm not panicking, guys. This is not a time to panic. The truth is, I've been feeling the same, and you guys can probably tell through these videos that I am not panicking. I'm cool. This is chill, right? You can make a lot more money. The truth is, I've been making more money trading when the market's been dropping than I was before, if I'm just being honest. That's the truth. Because with the volatility, there's just bigger moves to be made. And if you're ready, if you understand how it works, that's how you can capitalize, guys. So let's wrap it up here. I don't know how long I've been going, but I've said pretty much everything that I wanted to say for today's video. So tomorrow, guys, be ready for the roller coaster. Be ready for that circuit breaker. We'll probably hit. And honestly, I'm waiting to see if we ever hit the 13% circuit breaker, which is the next level down. So let's see what happens, guys, and I'll wrap it up there. If you guys enjoyed the video, as always, hit that like button for me. Consider subscribing to the channel, and don't forget to claim your 2 free stocks from Webull. Again, those are valued up to $1,400. All you have to do is put in $100 and you get those 2 free stocks. That is linked down below in the description box. I'll catch you all in the next video. Thanks again, as always, for the support. It's been awesome. I'll catch you all. Peace out.